We did one at the end of last year, for the end of the year, but now the start of the year is we want to get going, we want to get moving on it. A lot of us are sort of still stuck in holiday mode, as I was using my example while I'm in shorts and a t-shirt. And it's an ideal time. Things are not quite getting going. Some businesses are open, some businesses are not really open, sort of half in, half out. So that's what this talks about, to get that process actually going, get you guys thinking, get you guys moving on that. Okay, so preparing for the new year and goals. Goals are very key. They don't have to be take over the world, which is fabulous goal. But a lot more incremental goals around that space. Right. Yeah. So before I get too deep into it, how many of you are already trading? Just a show of hands, roughly. How many of you have a business? You're already doing something, you're already hustling. Don't be shy. Most of you have businesses that you've been at talks. Okay, perfect. Ed, can you just maybe mute everyone? I see there's still people talking in the background there.
Okay.
Thank you.
Will do.
Thanks. All right. So getting started and getting going shouldn't be a train smash. So we're going to walk you through this. Yeah. We were just discussing earlier. We've all gained a bit of weight over the festive season. So we're a bit heavier. Our wallets are emptier. We spent it all. And now we need the money to get going. So how do we get our year started? Obviously, we all want cash. We need to get going. Month end is coming. January is the longest month. I think there's like 93 days in January. So we've still got some time before the end of the month. Some of the lucky people who work at corporates were paid this morning. The rest of us as entrepreneurs get paid end of the month, maybe last day, or maybe not. So how do we make that happen? So what I'm going to do is go through the basics. Cash flow. Do you know who owes you money? We've got clients that owe us a little bit of money from last year. You guys will know who owes you money at the moment. Call them. I know a lot of people don't want to phone. They're like, I don't want to phone, I don't want to phone. So because you ignore it, they don't pay you. And I'm touching that. There's a bunch of new faces here. They went here last year, but I'm going to repeat some stuff. And the reason I actually and repeat it is not because I don't have any new stuff to say, but these things are so important that we repeat them often because they are the building blocks of everything. So call them. Clients only don't pay you for 3 actual reasons. You guys would have heard this. One is they never intended to pay you. So they were stealing your time, stealing your product. They were never intending to pay you. And that you'll know, obviously, if you phone them, the phone is not available or they're giving the runaround, you know you can stop chasing them. Write that off immediately. So it's not sitting in your head that I've got money owing. You don't. They never intended to actually pay you. They've stolen from you. The other time is they've got a cash flow problem. Just like you chasing behavior, they chasing clients to pay them. Then explain to them and go, listen, we're in the same boat. Yes, you owe me 5,000 or 10,000, pay me 500 rand a month. Because then you can go, of all my clients, there might be 100,000 or something, but if I'm getting 20 in to pay off the outstanding, I can plan. I can then pay people, I can pay staff, I can pay myself, and that process follows down. So they also have a cash. And the only way you figure this out is talk to them. They got the phone, they go, what's going on? I'm in a small business, like you, this is what we need to do. And you probably find a lot of people want to wait until they've got the 2,000 or the 3,000 or the 5,000 and pay the whole bill. And that's the biggest mistake because what happens in the month, things happen. So they don't pay you. So take the 500 rand, take the 300 rand if it's 300 rand. Use it. That's very key. It helps your cash flow. The last thing is often clients won't pay if it's a protest. You promised to do something. You said to them, this is the product I'm selling you or the service I'm selling you. This is the bar we've set. And we've come in under that bar. The client isn't satisfied. And now they're not paying you. And now when you phone them, that's when it's this, oh, but you didn't finish the job, or you're only 80 the way through, you haven't done. These are important feedback. So you can actually look at that and go, hold on, these 3 clients owe me the most money, they're the ones learning. Put the smaller clients aside, for a day or two, fix those jobs. Fix them, get them done, and I guarantee the client pays you read it. Yeah, so there's only 3 ways. There's no other reason why people don't actually pay you. A, they didn't intend to, they're going to steal from you. B, they're going to cash flow. And C, you haven't done the job. There's no other way. Figure it out, talk to your clients, guarantee you'll improve your cash flow immediately. Okay. So that's what we're talking incomplete work from 2020, but it's 2 sides of the coin here. One is you've invoiced clients and you haven't done the job, and now they haven't paid you. The other side of the coin is there's work that you can do so you get paid now. So you really should have arrived in January after the holiday, prioritize all your work. Who am I going to tackle first? What is going to pay me the most amount of money before the end of Jan? And the most amount of money, obviously, it doesn't always mean the most amount of work. You know, we have occasions where I can do the staff, or myself and the staff can do a lot of work and get paid 15,000 Rand for a whole bunch of work, or I can go talk to a corporate for 3 hours and get paid 15,000 Rand. I'm going to pick talking to the corporate. You see, so look at the work, look at the jobs that are in your inbox and stuff like that. Prioritize which ones are going to pay you the most amount of money for the shortest amount of work. Tackle those. That'll also, you know, and improve your actual cash flow. Okay. Cool. Next is deal flow. What happens if you don't have hangover work? Now you're looking for work. And what I've discovered is that a lot of entrepreneurs, I mean, there's two sides of it. We spend money to attract clients. And it costs money. The money might be our time walking the street, knocking on doors, explaining our service. Our money might be online adverts or stuff like that, or networking at events. So you're spending time and money to attract clients. And if you look back over all of last year, this time last year, if you look back in that process, people approached you and they wanted a quote, or they wanted to engage you for something. We don't sign every client. There's not anyone who signs every single client or closes every single deal. So now at the beginning of this year, go to, and the thing is, if you're online using a laptop or something, or you got even a Google account on your phone, go to your sent items. Remember, you always send someone a quote or send them a response. Might be on WhatsApp even. Go through, start in January last year, and literally just go through each one and contact them and go, hey, George, last year you wanted this thing done. Did you get it done? You know, did it happen? Were you happy with it? If they said no, they didn't get it done, everyone was quoting far too much money, then you can start a conversation. The beauty with that is those people know you already. You've done the hard work last year, attracting their actual and attention. So that's half the job. When you pick up the phone and they know who you are. You're not now starting again and going, hi, this is what I'm doing, this whole song and dance about how fabulous you are and what you can do. They know that. They're either going to tell you you're not as fabulous as you say, which is also actually good feedback, so you can change how you sell. But in your sent items is work. Because also, I touched on this end of last year. I think there's also only three reasons why clients don't actually sign it. One is the quotes. They like the quote, it's too early. They're just fishing. They're fishing for quotes and stuff like that. There's an idea they wanted to. So it's too early, and all they're doing is getting information. The next one is you're too expensive. They don't sign because you are too expensive, or and they're not expensive in the sense that you're overcharging. you're out of their budget. Okay, so it's a very different thing. And they go, no, they're trying to find someone who's inside their budget afterwards. And the other reason is, the last one is, they don't think you're capable of doing the job. And it happens often with us starting out of a business. You know, people look at you, but you're on your own. Where's your backup? How do I know you can do the work you're saying you are? Can you have references and things like that? And those are the three things. So when you go back and talk to all the people who you actually did the quote with over the last year, have those three things in your head. So when you're chatting with them, say, are you just fishing around? Obviously, you don't just go and like, I don't want to waste my time. Are you just looking for a third quote? No, obviously some tact and stuff like that. And in your conversation with them, bring these things up. It's like we know people want to shop around, they want to get quotes because they're not necessarily going to do the job now. But then say to them, what does your timeline look like? When would you get to that job? You know, are you waiting for your bonus to get paid out in Easter, or, you know, something? There's always why. They're doing something for a reason. And if you can sort of get that and note that, oh, so-and-so is waiting because whatever, their husband's gonna retire, he's turning 60, they're gonna use the retirement money to add an extra room on the house. Architectural work. So then, you know, put it inside your calendar. And then 2 weeks before that, when the date comes up, phone them again. Again, ask them, your husband's behind and retire. Are you still interested in doing that room? You see, this comes in. And do that for everyone. So in the talk you're having with them, then also go and say, you know, I quoted you, but you didn't accept it. Why? You know, and they might say, oh, you're a little bit overpriced. There's another guy I heard about, but then his quality wasn't so good. Then ask, okay, well, I can't drop my price because we don't want to work for less money than what it costs. Because then it's a hobby. If you're not making a profit, it's a hobby. And we don't have this room to have hobbies. We don't make enough money to have hobbies. We want to make money. So then explain to them and go, okay, cool. So it's not that it's overpriced, it's the value is in your job. How about we give you terms like labor? Start paying me, and then I'll start to work on installment 3. Then at least you know you can afford installments, pay it in 3 installments or pay it in 6 installments. And that also gives the client ideas now. Oh, hold on a minute. Yes, I don't have to suddenly find, you know, 10 grand in one go. I can afford 1,000 rand a month or whatever the case is. And then if they say to you, but you didn't have any experience, I don't know who you were, you're just like a one-man band, have references. Go, yeah, yes, clients of mine who I've done work for, here's their actual contact details, phone them. Phone them. And as soon as you cover those 3 things, it's unless the person is in the first stage where they're actually waiting for money, you will sign clients, you will get work. Too often we hear no and we walk away. The money is in your sent items. Promise you. Every year, we do this exercise every single year. We get an inquiry every day. There's an entrepreneur every single day that phones our office, either by email, gets us online, stuff like that. We don't sign every one. No chance. But every year we go to our sent items, and every single person we sent a quote to, we chase them down. We don't have to find them because the work's there, they know us. Okay, so just think about those things. Okay, admin, everyone hates it. I know it should actually be a four hates a word. You know, use this time to get organized. So get all your things. If you're going to be applying for tenders, if you're going to be sort of going to corporates, get on their vendor lists, you want to get onto BE enterprise and development programs, you already have in your head where you want to take your business, what you can do. Find out what paperwork you need and get it in order. Get your tax clearance, which means you have to go submit your taxes themselves. Even if it's nil, submit the nil return. That'll give you your tax clearance. Go get your EME certification. They're going to ask for it. Get all your documents in order. Get everything what you need. Are your annual returns paid up at CRPC? Because the bank's going to close your bank account, or they'll freeze your bank account until you pay the annual returns. So those type of things, just get your homework done now. It's quieter. So set time aside and get the admin done. Promise you, if you guys use January and February just to do this page, when we do these talks throughout this year, by Easter, a lot of you guys will already have a lot of money. You'll be a lot less stressed to the hand you are now. Okay, so yeah, just look at that. Before we go into mentorship, any sort of anything you want to ask from what we've gone through so far? Just checking if there's any questions online. Anyone? I'm always surprised when no one asks me anything. I'm like, I'm not that good, guys. Really, I'm sure I've left something out. There's something in your mind, you want to ask me. No, okay, cool. Mentor. End of last year, we touched on this. I know a lot of you guys are new here. So again, a mentor doesn't have to be somebody you spend thousands of rands on. There are companies out there that do this. I mean, I think what some of them have done talks here, and I don't want to say bad things about companies who offer the mentorships services. But often we find a lot of the mentors have never run a business. The business they have run is the business they're doing. So they've got no experience, they've got no understanding of your type of business, or no understanding of your circumstance, or no understanding of where you are. And then on top of that, they don't have understanding on taxes, accounting, and things like that. So, but a mentor can come in various forms. We always say, here, in this room, there are people here who you know. There are people at home. Entrepreneurs know other entrepreneurs. Guaranteed. 8 out of your 10 friends will actually have their own business, whether it's a side hustle or something like that. Because entrepreneurs tend to talk to other entrepreneurs. That's our job. That's what we do. We're out speaking to people all the time. Whether I'm selling you something or you trying to sell me something, we know other entrepreneurs. So talk to your like actual group of people. You'll see some person is very good at sales. They always, there's sales coming and they always say, how do you do that? And you've got a sales mate. You might be in a different industry, but they've got principles of, I call a client, I call 3 clients every day. And then that's what they do. Like, I hate it. I hate being on the phone. If people don't like answering the phones, but they do. They call 3 a day. So you learn from that. There's other people who've got other inputs, accounting, tax, a bit more specialized, but there's still general stuff that you can learn. They've got experience in certain things. Do that. That's free. So you're almost forming like an informal board of your actual company. So not an official board where you're paying good people to be on your board of your company, but it's an informal one. How do I fix my operations? My shop is just never making money. I know the sales are happening, but there's never stock. What's happening? And they explain to you, hold on, this is what's happening. Load shedding's a mess. So your milk's always getting sour and your staff are stealing the stock out the back door. They'll help you, they'll guide you. So chat very informally, get a little board in place, 2 or 3 people who you can talk to. That is you don't have to go pay a company thousands of rands a month to get the same advice. Promise you, you don't have to. Okay. But mentorship's key. Just check. Okay, cool. Sometimes things on the. Sorry. Murphy's Law. Okay, so we've gone through mentors. Mentors will also help you set goals. And as I was sort of joking about earlier when we started, The goal might be to take over the world. That's fine. It's good to have massive, huge goals, but how they're being achieved. So your mentors will help you. So setting your goals. What do you want to do? If it's take over the world, fabulous. If it's to start your own company, if it's to expand your company, various things. What are the steps in place? Find out what those steps are. See if you can actually break them down. So who's going to help you? So people can just see. Okay. And this really is big. So like, depending, you're going to grow your business. And it might also, and it doesn't necessarily mean staff, but this, in this case, it is staff. You want to expand your company. So a lot of entrepreneurs, and we have that frustration sometimes. I can, as guilty as anyone. By the time it takes you to train someone, you could have done the job. But that's very short-term thinking, because that's a problem now. And the reason I'm feeling that problem now is because I didn't do my homework to plan that. I've seen my sales funnel was growing. I should have been training somebody 2-3 months ago. So that when the boom happens, I'm not sitting there going, I can't train you. I'll just do it on myself. So mentors will help us. They'll guide you. But also once your staff, and slightly on this, when you're looking to hire staff, and I know it might not be an everyone's, it might not be permanent staff, it might be temp staff, there are tax incentives, which you touched on, which will benefit on that. But when you're looking to hire someone, whether it's an outsourced person, temporary person, full-time person, hire for the job you hate. In your business, there's a part of that job you hate. I'm purposely using hate as a strong word. And it might be admin, you're going to put it off, whatever it is. Find that part of your business that you detest completely. Hire somebody that loves that. Now, there's a reason. There's two actual reasons. Obviously, now you don't have to do it, so you're happier, obviously. Now you can go do what you want to do, which generally generates more sales. So what we find with clients, when you're spending all the time, that thing lives rent-free in your head because you don't want to do it. You're not doing your other part of your job. So hire somebody that loves that. And then when you find you suddenly having to do more of that again, you know, A, they're not doing their job, because you know immediately, because you hate it, because it's on your desk now. So you see it straight away. Or B, they need help. Let's hope it's the need help part. But in either way, you can address it straight away. Because, and that's why, like, always hire for the things you dislike. Not the people you dislike. Don't hire those people, but for the task you dislike. But I guarantee you, you're going to feel it immediately when it lands on your desk. And then you can address it. You're not going to put it off because it's like, oh, Tyrone, it's your job. Why aren't you doing it? I'm overworked. Okay, let's hire someone else. And I'll be eager to hire because I don't want to do that job. I hate it so much. You see, and that is the thing. So, and mentors will guide along this. I mean, I'm making a big joke about it, but do that. Look at your systems. Don't, if you have someone, start training them now, getting them in the place. There are tax incentives. We touched on it. There is on our website. You get money back. So even though your staff member, if you're hiring a young staff member, even if they're working part-time, you can get pay-as-you-earn credits back from SARS. So then you paying less pay-as-you-earn as the company owner, and as a result is more money in the bank. Okay, so I'm not going to dive deeply into it. There's a talk we did that's on our website, which we can go through. Okay, and this ties into what we just saying. There's a difference between working in your company and working on your company. And a lot of us start out in your company. I'm taking a thing here, I'm doing it here, I'm selling it there. Your head is down. You're looking at the task. You're looking at what you're doing. That's you being in your company. Being on your company is you're looking up. You're able to see, but I'm doing this. Maybe I can buy these things cheaper somewhere else. And you can only tell that by looking up and going, who else supplies this? So working on your business, or you're selling it now, and you're only selling to people who arrive at your door to buy it. But if you're looking up, you can see who else would buy, what other sectors would. So, and it's hard. It's very hard to get people's mindset to change because we worry that if we're not working, we don't earn. So it's not a case of stop working and look around. Take some time. It might be a morning. We all have a quiet part in our business. There's always a quiet time. It might be Monday mornings when the phones don't ring. It might be Wednesday afternoons. It might be Friday. But find a time where you can actually just take out a few hours, half a day, eventually build it up to one day. And just one day a week. And you're looking around, looking at your business, looking through the processes, looking at the staff, looking at your customers. Where's it going? That's going to do more for you than working in your business, having your head down. And I have used this example, and I'll use it again because it's incredibly relevant. And I used it now, this last week again with a client. A client obviously buy like suppliers, in their cost of sales, they're buying product and they're making stuff. And I sat with the client and I said, but have you looked at where you're buying everything? It's like, yeah, no, he knows the suppliers and they're lovely and Paul's awesome and, you know, Fisa is great and this and that. I'm like, I'm not talking about that. They're nice people. But in this occasion, one of the items, you're spending a couple of million rand a year with the actual like a supplier. And I said, now go to them and go, I've spent 3 million rand with you last year. What amount would you give me off from my invoice if I keep on working? Or just go to someone else and go, I'm going to now buy 3 million rand worth of bricks from you. What would you charge me? And then if it's cheaper than what your existing person is, you go back to them and say, I can get my bricks for X cheaper. Doesn't mean you're moving. What happened? He did this exercise. The existing person says, yeah, I can see that because our raw material costs had come down. So we could match that price. Guess where that profit goes, that saving? So 10% on 3 million is 300,000 rand. Guess where that goes? In his pocket. No extra work needed. Not 1 ounce of work. It was a 1 hour meeting. That's what's working on your business. You see, so just spend time and think about that. And we might think, but I don't have 3 million rand that I'm paying. Doesn't matter. It could be someone doing a website. You want to go to a website company and they want to charge you 15,000 rand to build a website. There's a kid who's just finishing varsity. You can build a thing for 5,000 rand. It's probably way better with the latest tech and everything like that. That's what you do. Okay, so just think about that. Spend a day looking through your business. Okay, these are some guidelines. Things you should be thinking about. The most successful types of industry, the types of businesses in the world are actually franchises. They're the most successful types of companies. McDonald's, we all know who they are. Burger King, all of these franchises. Coca-Cola, although the Coke brand that is one thing, the people who actually bottle the Coke are franchises all over the world, and that works well. And why I'm saying that is that what does a franchise have in play? Our actual accounting firm is a franchise. We're the first people in the world to franchise an accounting firm. And it's handy because now someone comes in and buys a business in a box. Everything's there, procedures are there, processes. How do you market? The brand is already there. So start thinking of your company in terms of what happens if I turn into a franchise. So Put your operations and training. And don't go now and stop and do nothing else. Follow a process. Document the things you do often. Do those things first. So if every day you've got to do a certain thing, go into your office and then document that process all the way through. Because now, so when we hire new and accountants. I mean, we're busy training 50 trainee accountants at the moment. And they're all engaged, they're all happy, they're all enjoying what they're doing. And what they're doing is following our training manual, where you documented everything. How do you apply for VAT? How do you register a company? These are things that we don't necessarily do every single day, but we do them a lot. We documented the entire process. Now, these youth are going through and they're literally following those steps. So training manual, how we split it, what's a good thing. Training manual is the things you do in your business, like the processes in your business. The operations manual is how to run the business, the management of the business. And they're getting into that this year, so some of them might cry. But do that. Document the steps that you go through every day to get your business going. Because when you hire a staff member or hire someone, follow the steps. Follow the steps. Already it saves you time. Okay. Very, very important. Spend time with an accountant. We are here. We do offer our services for free. That's why we're here. We do often say, if you've got questions, just ask, send us a mail. We get very few mails. So clearly you'll be very good and you don't want to ask us anything. Or you don't think we can do the work, or you think we might be too expensive. Remember what I said earlier? So chat to someone about the finances of your business. What does it cost? How would you do your budgeting? Would your gross profit be enough to cover your operating expenses? I have touched on this, and it's a nice, easy example. A lot of people think that hiring a staff member, one extra staff member, they go, okay, I want to pay them $5,000. And in their budget, it's $5,000. But it's not $5,000. 5,000 Rand for the staff member. That's another 200 Rand for internet. That's maybe 1,500 Rand for a desk. 7,000 Rand for a laptop. That's the laptop they're needing. Another 500 Rand for transport. We can help them cover their transport. Suddenly that staff member is 20,000. That's not inside your budget. You're thinking 5,000. That's why it's important. So sit with someone and just go through those actual processes. And we don't do it. I know we don't do it. We never did it. We do it now because we got smarter now. So, and you don't have to know everything. If you're unsure, that's the point of talking about it. And often when you're talking to a person, the knowledge filters through, because you generally do have it somewhere, and that filters through. So do that. Spend time understanding your business, understanding your procedures, how you're going to market to your clients, what that will cost, and things like that. Okay. Okay. How do we make sure? There's only one way, truly, is that you actually have to get up and work. But there are steps. I mean, the only place where success comes and before work is inside the dictionary. I promise, it's the only place you're ever going to find. Okay. So set goals that motivate you. And it doesn't, and make them small and make them manageable. Seriously, like take over the world is a nice goal, but how the hell are you going to achieve that? And the first thing you're going to do is get out of bed and make your bed. Make it manageable. If I can't even make my bed, how am I going to do anything? So I'm just using examples. So I have to get up and make my bed. I'll get onto smart goals. We're going to break down on what that means. Put them in writing. Put them in writing so that you have them. You can see them. Notes on your phone, on your fridge. When you go in the morning to get something to drink, on your fridge. What you're trying to achieve. But make them manageable. Remember, make them manageable. Right? And then how you're going to achieve them. fortunately, we live in an age now where a lot of information is available on our phone. I mean, this thing is probably the most powerful invention that's ever happened. And it doesn't have to be an iPhone, but this thing is incredible. This is university. You can go on your phone. You can right now go to free course at Cambridge, free, or Harvard, for free. Positive data. So use that. Information is available. What's not available is people wanting to do it and chase it down. There's a lot of stuff, YouTube videos. We've got a YouTube channel. So all these talks, we actually can record them, we put them online, they're on our website. There's so much free information. Utilize it. So make a plan. How do I stick to it? How am I going to do it? And then obviously we'll be talking about mentors. Have someone who's not going to take a shit. To put it bluntly. Have someone who's not going to take a shit. When you go, yeah, but I do it. Hold them accountable. You hold them accountable. They should hold you and accountable. Do that. And it's a good thing. It drives you. So these are the sort of goals, the SMART goals we're talking about. SMART obviously being the acronym. So specific. I'm going to sign one client a month. Make it, make it easy. Specific. How can I measure that? Well, come end of the month, do I have a client or don't? It's very easy to measure. Client note. Is it attainable? Yes. For us to sign one client a month is attainable. But obviously, gauge your industry. Some circumstances like a tender or a large corporate might take 8 months to close a client. So then you can't say sign them in a month because it's not attainable. You see, so make it attainable. Is it relevant? Yeah, I need the money. Where does the money come from? Clients. So it's relevant to the actual book of business. And it could be anything. It could be training staff, improving office flow. There's a time needed. What is the time? Is it needed now? Because some things we set for ourselves that are not needed. Is having more work right now really the thing you need? No, I don't need more work. What I need is more money. So maybe a customer is not the thing you need. Maybe it is to cut costs within your business. Then you got more, more cash. You see, so just go through it and make them bite-sized, make them things that you can do, like it's easily attainable. And then once you get that feeling of a win, then you want to do it again. You want to do it again. We don't want to be Amazulu, like we said, or Man United who lost again. We want to be Arsenal, maybe keep winning. Okay. So these are just some quotes that we've popped inside here, but they tie into it. So a lot of us have calendars on our phones and stuff like that. We don't need fancy laptops. Our phones got a calendar, Google Calendar, whatever. Use that. Put your things inside there. Set them inside there. What I'm going to do on this day, I'm going to do that, and it pops up on your phone as a reminder. And it reminds you to do it. Stuff just keeps you going. Okay. Oops. Yeah, the last thing is questions. Questions from you. Anyone? No, I can't believe it. No. Let me see if there's questions online. There are a few questions online. Cool. If I should share this so we can all see it. Okay, guys, I'm going to just share this screen. Oh, okay, cool.
Good afternoon, everybody. Just one question, because you were talking about training of staff. and hiring for the jobs that you want. As entrepreneurs, there's that thing whereby you get ill as an entrepreneur, and you have to train the staff, or you don't have somebody who's in a key role to be able to do the work that there's this insurance, they call it key role insurance.
It's key man insurance.
How does that work in terms of situations like that? Let me give an example. As a woman, I may take maybe 3 months of leave and be away from my business. And then because of maybe an illness, or because of maybe I'm pregnant and there's a baby on the way. So something like that. Is it the insurance, can it be able to cover maybe my operations at that point in time when I'm away, and continue to maybe train somebody in the meantime while I'm away to do the job that I'm supposed to be doing?
Okay, just to answer that, so we're not financial advisors. The best thing would be to chat with a financial advisor. Our experience with these type of things is that the insurance companies look after the insurance companies. They don't look after you. So they normally have very sort of specific rules. So I should have put that up here. They normally have these specific rules around where they're going. So yeah, just check with that. Key man is normally where a partner gets injured or dies or isn't in a wheelchair. And now the insurance pays out, so you can obviously hire somebody to take over that role. And it can be staff as well that you can have key man insurance for. It doesn't have to be shareholders themselves. But then also in terms of the insurance you're talking about, if you go on maternity leave, like certain sectors have that where it's more like an income protector. So it actually protects your income if you lose a job. So maybe you're out of work and they'll cover your sort of income for the next 3 months or 6 months. But it's very hard for entrepreneurs to get it, or it's very, very and expensive. Will hard to be found. So that, that will answer it. So those products are there, but we found for 90% of our type of clients, they don't utilize them. They're far too expensive. Keyman is becoming a lot more available now, which is good. But yeah, income protectors, the banks often do it. If you take a loan at a bank, then they want you take insurance so that if you then lose your job, like in COVID, what happened, then the insurance policy pays out so you can keep on paying the loan. So those things are there. Okay.
That be tax deductible?
Yes. Yeah. It'll be an expense on your business, and then the income is not actually taxable either. But also it depends on how you structure the policy. Okay. So I'm putting these questions up here because I want to actually, I don't necessarily want to put my glasses on. Where did it go now? I know I did that earlier before the talk. Sorry, Mandy. You why is it not here? Yeah, I just want to read. I'll just read them. Yeah. Okay, Mark, just general goals. Okay, stretch target. Okay, we covered most of that. So it was asking about how do you keep staff, retain staff. Problem with us being entrepreneurs and small business owners is we're often an incubator for large companies. Staff learn so much from a small business because you're doing everything. And they learn everything. They learn all the roles, they learn everything. So staff either then become your actual competition. So they break off on their own and they do exactly what you are doing and try to steal your clients. Or a larger company hires them, because as a small business, what is people want? Everyone wants to earn more. Everyone wants to take on more pay. And if you have that ceiling, obviously you're not making enough, you aren't able to. So ways to retain staff. If they're only chasing money, it'll be hard. So if all things being equal, you're offering the same money, the same benefits, it'll come down to things like working hours, working conditions, things like that. So yeah, and if they also enjoy it, most people, I mean, studies have shown most people will stay at a company because they like the people instead of leaving for a job that pays up to 30% more. So yeah, Ed, on that, please don't tell me that I've got to have a chat with you about retaining you. Okay, I think we covered the hiring resources. Yeah, just a tip on hiring someone. Mark's mentioning, yeah, especially if you're in the sales game, so like hiring staff. One of the tips we give when anyone who's customer facing, like a salesman or something like that, own the SIM card. Give them the SIM card. You own that SIM card. You know how often a salesperson leaves a company, joins the competition, and all your customers are phoning them because that's the number that they were utilizing. So own the SIM card. When they resign, the SIM card goes back to you, to your next staff member. And that's a very simple thing to say, but it happens so often. You know, like we see it. We see it with new clients we get, and the phone rings. And like, oh, it's a client from my old company. They're phoning me. I'm like, rule number one: if you got salespeople, you don't want this to be happening. So yeah, it's things like that. And so yeah, so just very good tip on that. I mean, I'm not going to go into salary structures and salary things, how to retain them. That doesn't sort of add up here. Okay, a lot of these are just flexible working hours. Yes, sir.
I have a question. Sorry to disturb you.
No, go.
I wanted to know how long can I keep of temporary before now permanently hired according to the.
Okay, so if you don't give somebody an employment contract, so someone starts with you, they don't have an employment contract, after the first month, they're permanent staff. And they fall under the basic conditions of Employment Act. So your employment contract can only be an improvement on the basic conditions of Employment Act. It can't be less than. So if someone's there and they've been there doing the same job and you haven't given them an employment, they're permanent staff. You got to follow the basic conditions of Employment Act to actually get rid of them if you want to fire them. You can't just go, cheers.
And this conditional contracts, like for instance, in construction site.
Yeah, so that's that's the starting point. If you don't have an employment contract, then if you have short-term contracts, so some employers will give someone a 3-month contract. And then what happens is after the 3 months, they give them another 3-month contract. If that person is doing the same job for the same customers and you're just extending it by 3 months, they're also permanent staff. They'll meet you at the CCMA and the labor court, because why are you giving them 3 month, 3 month, 3 month? The smarter way to do is link the contract, the employment contract, to the term of the work. So the actual construction industry does that a lot. So there's a shutdown happening at SAPREF. They hire all of us, and the employment contract is per the term of that contract, that shutdown contract, or we want to launch a website for a client, that's for the build of that website. So if it's linked to that, when that job is over, that employment is terminated. You can employ the same person again now on another contract for another client doing similar work. So you leave SAPREF and you go to Engine doing a shutdown, same thing. You're not permanent staff of the company hiring you. You're hired specifically for that actual contract. And that you can do as many times as you need to.
In terms of benefits. Like I know short-term contracts, normally the incentive will be project bonuses. If the contract, maybe say we're doing roadworks, take 2 years, the debt in check, does it apply to such employees? The medical expenses as well, do they fall under that?
So, the only benefit you're obligated under law at this point is workman's compensation, which you have to pay. The benefit there is not a benefit in the sense of you can go utilize it as in case of an accident, obviously, and then unemployment insurance. So those are the two. Trying to do two things here. So those are the two things that you're obliged to. You don't have to give medical aid. You don't have to give bonuses. You don't have to. Yeah, there's any of the benefits that you can think about that large corporates. That's over and above the basic conditions of employment. So those are why you keep staff, because you're adding these things on. You're adding the incentives, you're adding the shares, you're adding the, so that's where it comes in. So there's no UIF and workman's compensation. You have to by law. When that you hire someone 21 hours a month, that's not in straight away. And you'll be prosecuted if you don't do it. So there's someone in the corner first. So,
Thank you so much. Ms. Blanga. Just wanted to find out, so regarding the in the beginning stages of your business, and you've tried to employ a junior member of staff, and they are learning the ropes, quite often.
okay, I'm listening.
What would you advise me when it comes to sharing the progress that if, for example, the business is generating revenue of about 100,000 a month or 20,000 a month, and they are earning maybe slightly, quite a junior level, sort of the same salary. Would it be advisable to start early engaging them about the state of the business, keeping in mind the fact that they are also determining maybe 20,000 or 100,000, but there are costs that go into it. There could be paid supplies, so they might only be looking at the one aspect of the revenue. Yeah. So in short, what would your take be in terms of when is it the right time to obviously get them into the invoicing, get them into the amount that we are generating as a business?
So there's no right time. That's entirely up to you. They're employees. They got no right to any information about your business. None. As if you pay them a salary, pay it on time, pay it regularly. Don't mess them around on that. But you don't have to tell them what you're turning over. You don't have to tell them how much profit you're making. There's no obligation to actually do that at all. If you choose to do that, that's fine. That's fine. It might work. It might work in your type of business. And if you're looking at them potentially to becoming partners or shareholders or things like that, then when you feel comfortable in that space. So there's no obligation or right time or wrong time. I mean, staff can't stand there in demand, but I want to see what you're making because I think I must earn more. Well, if you think you must earn more, go find a job somewhere else. So there's no obligation. I'm saying it like that, but obviously we're not talking about where you're exploiting people, because that's obviously not right. But yeah, you're under no obligation to share any of that information whatsoever. If you choose to, that's fine. But yeah, just gauge it on yourself, gauge it in your industry. I don't know how to give a sort of answer on that exactly. So you.
My question is based on setting goals, as you just touched earlier. In terms of setting goals, what are external factors that you can absorb, or you can just look away and say, Right, this may hinder or may not, may affect the success of the goals or the measure of your goals. Which factors you may consider, which you don't need to consider.
Okay, I'm gonna answer that with a bit of a joke. It's mind over matter. If you don't mind, it doesn't matter. So, but what I mean by that is, if something has no impact on your business, you can ignore it. So only focus on the things that are going to have an impact on that goal. So if you set a goal and 20 other people in your neighborhood set the same goal, if you're now thinking that you're going to split the revenue now, or there's possibly other people who are going to be chasing the same clients, then think about it. Then think, well, how do I separate myself in my industry from them, so the customers rather, have and like actually choose me. If it's something that's irrelevant, to your actual business, what I can't even think of. Yeah, should my car be blue or should it be white? Or that's totally irrelevant. If you're going to put branding on it, maybe it is relevant. But you know what I'm saying? So just only focus on the things that are going to move, that are actually going to move the business or move the goal. Everything else, and that's why, like one of our earlier talks, we got a blog on no, no, the word no. Practice that. You guys must really practice no. Someone says, I just wanted 5 minutes of your time to no. Really, no. No is the best word you can learn as an entrepreneur. Because someone will meet you for coffee. Just 5 minutes. I just want to ask you a question. No, because that 5 minutes could have been doing something else. So learn that no, and just apply it to everything. Can you just quickly? No. If it's going to help you achieve your goal, yes. If it's going to get in the way of your goal, no. So the whole thing, no is such a positive thing. Even when your clients say no to you, then you ask yourself why. Why are they saying no? And you touched on earlier, is it price, is it experience, or they're just, fishing? Find out why they're saying no, and then you know how to obviously get around that. Okay. There is a question online regarding bringing on shareholders. So often, South Africa is well known for, we can't get funding at banks. As entrepreneurs, it's actually easier to steal the money than try and get it at the bank. So how we get money is obviously we get from our family, our friends. So full friends and family are the easiest money. And then on the other side is other people who want to be involved, in your business. They like what you're doing. They like you as a person. They either have a similar business or similar dream. They want to get involved. So they'll put money in. So that's quite good. Some of them just don't want to be involved. They just want to put money in. So just be very wary of who you choose. Is it someone you can spend a lot of time with? We have a thing we call the Arsenal test. Don't take money from people you can't work with. Don't hire people you can't work with. If it's somebody you can sit with for hours and feel comfortable with, hire them or partner with them. That's what it's like choosing a wife or a husband. You don't want in 3 months to be going why am I doing this? What am I? It's hard to now get out of business. Just like it's hard to get out of marriage, it's hard to get out of business. There's so many legal forms, what you have to do and stuff. So pick people that have got the same goals, the same visions, just like you choose a spouse. Same goals, same visions, same things drive them. Preferably counterbalance. So if you're good at sales in your company, someone who's good at operations. So at home, if your wife makes the money, you stay home and you look after the kids. It's like, if anyone knows, I want to do that job. I'll be a stay-at-home dad any day. But yeah, so choose where the counterbalance fits, and then detail everything. Same with marriage, you have an antenuptial contract, you detail all the things that you're doing. Do that inside your company. It's called a shareholders agreement. We do have a blog on this. I'll put this website up purposely. I want to just, I'm going to share it so that I want to show you where the stuff is so everyone can see. So up here, I'm trying to drive this now backwards. So we've got all these blogs. Yeah, so go through the shareholders agreement, detail it. So, and we have these blogs. So go to our website, find them, and there's things that will tell you what to do. It doesn't have to be complicated. The law was changed in the sense that they want legal documents to be more in sort of general language. I mean, there are the sort of Latin sort of prescripts that are normally in there for, you know, your address and things like that, but it doesn't have to be awfully complicated. Two people agree and they write it, and it's very easily understandable. And we can do it in any of our 11 languages in SA. Doesn't have to be in English. Doesn't have to be in any, you know, anything. Just write it down. If it's understandable, it's clear, and both parties understand it, or all the parties involved understand it, and they sign it. That's a legal document. Even if you do it over email or on WhatsApp. If you do have a WhatsApp chat and you all agree to an outcome, this is what we're going to do. That's a legal document that will stand up in court. Okay, so just to answer the shareholder question online. So let's see what other question there was. There's a question if it's a good idea to go solo when starting a company. Personal choice. There's no right or wrong answer. If you're starting out on your own, keep it as cheap as possible. That's what you said earlier. Funding is hard, so keep it as cheap as possible. The cheapest as possible is you trading as. Your sole prop, you trading as. For me to go to Spar and buy fat cooked dough now, it's going to cost me 20 Rand and some oil. I can be trading at the taxi rank this afternoon. I don't have to register a company. I don't have to do anything. That's how cheap it is. So do that. Registering a company at SIPC, 75 Rand, 125, I think, with this. Now, automatically SIPC registers you with SARS. Now you do nothing. Nothing. You got a client who's closing a company that opened 18 months ago, 2 years ago, actually. And SARS has given them an admin penalty because they didn't do their taxes. Even though the taxes was nil, he's going to pay 4,500 Rand to SARS before he can close that company down. Why do you want that headache? It's not worth it. So start where you are, make the money first, test what you're doing. If you have a job, part-time, whatever, where your employer or, you know, is taking off any pay you earn, your side hustle, if you're making a loss, because you generally make a loss at the start, you can get a tax refund. So the pay as you earn that was been taken off your pay every month, when you do your tax return at the end of the year, because you made a loss in your business, they'll refund you as much of that loss as is available in your pay as you earn. A lot of people don't actually know that. Very nice thing to do, you know. So and it can be anybody. It can be your brother. You know, we've had cases where husband's working, wife's not. The husband starts a side hustle, employs the wife to do it. They make a loss. We file his actual taxes. They get back 50,000 Rand from SARS. Thank you for playing. You see, and it's proper legal, Section 12 of the Income Tax Act. So think about things like that. So start small, start as a sole prop, and then as you move from there, it's making money. Now, okay, now I'll register. Now I can afford an accountant, or I can do basic books, whatever the case is. Okay. So I think that should cover the online one, Ed, around going solo or not. Cool. I think that pretty much covers it online. But you guys, I want you to just spend time on our website. So I'm going to be a little bit backwards here because the screen is actually on my mouse. The screen is actually, that screen is actually this side. But yeah, on our site, we've got all these blogs. Let me try to drive this thing again. They're generally only one page. They're very easy to read. I write them. So I write them like we're speaking now. That's exactly how I write them. We will use the correct terminology in terms of tax and what the banks will ask. So it'll be an income statement, it'll be a balance sheet, it'll be management accounts, because those are the things you're going to be asked for. So it's good to understand what the terms are, but we don't go talk geek accounting speak that no one really cares about. All right, so just going to go through here. So on the blog, again, I'm going to go down here. So there's a whole bunch. Okay, so you can see there's articles that we write. These talks get recorded. They get posted on here. So we got, these things will be on the way. Let me see if I can get higher up. Yeah, so we got the videos. We've got some old videos we did with Microsoft from years ago. Podcasts, we had a podcast going, which we're going to start again. So everything's on here. If you need anything, you got a question, go onto our website. There's even a spot here now that I've moved it all. Yeah, with the mail, go and you can just mail. It comes to Ken and Simba, and just send us something. I'd like to know X, and we can help you. Okay, so don't be afraid of it. We tell people, like, we've done this talk. This is the 11th one of this year. Next month is the last one of the year. We start a new one in March. Of the 11 months, I don't think we've had 11 people inquire about stuff. So don't be afraid. There's no such thing as asking something foolish or, oh, they're going to think I'm an idiot if I ask that. Ask it. Trust me, ask it. Okay, cool. Anything else? Questions, anyone? Any more online there, Ed?
Okay, Ron. I don't know if you can hear me.
Yep, good.
Okay, thank you. Just wanted to ask something. You see, sometimes when you are an entrepreneur, something that you do within the business itself, it takes time for you to qualify for maybe a loan or to get funding and things like that. And some things they're much more easier to get when you on your personal capacity. So I just wanted to ask, let's say for instance, I take some money from the business and I pay myself maybe 15K or whatever. And then in terms of the income tax now, because I'm actually paying myself, what are the pros and cons when it comes to subs?
Okay, cool. So that's a very good question. I want to answer, but I'll answer a few things around that you will help as well. To get funding is hard. We all know that. I mean, it's, when we started up years ago, you funded from your credit card, fund the business. Because it's easier, like you're saying, to get finance in your personal name. So you leave your previous job, you get a loan at the bank because you got a pay slip, you get a credit card, you get all these things because you don't need it inside your company. Yeah, you're going to pay it, but that's one side. So to get funding, raise funding. I did touch on it in an earlier talk. The easiest way to get funding or the cheapest funding is enterprise and development. So ED, enterprise and development funds, look at your business, look at the sector you're playing in, look at the big corporates who you can offer your services to, because it does work that way. It's government. All the guys on the actual JSC are doing most of their work for government and departments. They're supplying product, whatever. Then the next group of companies supply them with stuff or buy from them, and then we, the smaller companies, obviously spend. So be with the enterprise and development. So look up that value chain and go, maybe I can get ED funding there. I mean, there's clients, we're doing work for a client now. where they literally gave entrepreneurs, we doing the year's accounting, like our Dr. SME program I was talking about. And they've given these guys a vehicle plus a trailer, nearly 800,000 rand. Free, it's a grant, gone. So that's the only easy money. And I would say easy in the sense that these corporates have to spend it. So if you can give them a service which is equal or better than, so equal to the existing person who's doing it, and now you better because your BE points are better, you level 1, or you equal on BE points, but your service is better or your price is better, equal or better, you definitely going to get something out of that. So that's a good way to do it. So to come around to you, take him out of the company, the cheapest way to take money out of the company is pay as you earn. Definitely the cheapest way. On 15,000 would be like 800 bucks or something like that. It's not very high. That's the cheapest way of doing it. Because if you keep it inside the company, you pay company's tax, and then you take a dividend later, much higher, like 47%, 47%, as opposed to 18. You know, so it's a big jump. So do that absolutely. You know, and then what happens is at the end of the year, you know, you then you pay your taxes, you know, or each month you pay your pay as you earn on it. If you employ one more person, a junior person, you can even get 1,000 rand back on your employee benefits. So you don't pay any pay as you earn either. So that 15,000 has got no actual pay as you earn on it. So yeah, just structure it accordingly and just check. So yeah, do that by all means. Take the money, and it's like, you'll see if you put the money in, like into Capitec, before you've been there 3 months, they're sending you an SMS going, come get a loan for 300,000 rand. So those things are available, but they cost you money. Loans are expensive, but then if you use it to grow your company, then it's fine because you've worked it into your margin. If you take the loan and you put it against the wall, you got nothing to show for it. Then it's a waste. Then it really is. But if you use it to buy stock or educate yourself further, it's always an investment. Yeah, does that help? Perfect, thanks. Yeah, something I want to actually cover that a lot of SMEs don't do. Guys, the Tax Act is quite clear. Any expense in the production of income. So when you're wondering, what can I claim as an expense when I was starting my company? Because you don't want to have a very high profit, because then you're paying high tax. Any expense. If I can read here, any expense, if you can draw a line between that expense and you earning an income, doesn't matter how faint that line is. You might only need it, that expense, once every 2 years or whatever. Any expense, and that expense can be, I'm saying, anything. I'll use a very funny example. And it is a joke, it's not a client of ours, but it is, but we have used this with clients. You're unemployed, you start a YouTube channel. You use your phone, or maybe, I don't want to say OnlyFans because that's a bit rude, but you start a YouTube channel, or you got a TikTok channel, or anything like that. Now it's cheap because you got a pay-as-you-go contract, but you got a phone, you can use the cameras are good. Now you start a channel. And YouTube starts paying you because there's adverts. So you start earning money. What expense can you claim? It's not just your phone. So, and we'll use OnlyFans because I think it's a good laugh. The lady on OnlyFans, or even the guy on OnlyFans, he might be standing there in his board shorts. His gym fees to go to gym. Supplements, the supplements he's taking to look good and buff. His entry fee to the nightclub. Because that's actually contributing to his income. Any expense, if you can draw that line, throwing a birthday party, having 100 people over and you're putting it on your channel so that people can see what a fab life you have. It's an expense. Any expense in the production of income. Okay, so don't throw that stuff away. If you're not sure if it's going to get faded, so you can't take a picture on your phone, it'll stay just as good. as good every day. Any expense, remember that. Because too often we do books for clients who've been trading for 18 months or 2 years, and we go, what about this? Surely you must have had, you know, petrol. Even if you're catching the taxi driver doesn't give you a slip. Pick up a piece of paper on the floor and go 20 Rand, taxi, Lazi, Durban. That's more than that. Take a picture of it. The date, transport, 20 bucks. Because in 18 months, I'm going to need that. And you're not going to remember, you're not going to have proof because you paid them cash. Any expense, keep everything.
Yeah, thank you for highlighting that, because I even take pictures of all the slips that all the transactions. Probably keep it up Google or somewhere there. How often should you be keeping that? Also, should it be at least 2 years, then delete it? So the question was, when you keep those slips, the hard copies, if you've got the pictures, are the pictures sufficient, or do you need the hard copies because the hard copies start to fade? And how often should you throw and check that out, you know, or should you keep it forever?
Okay, so SARS will want you to keep it forever, but the legislation is 5 years from your last assessment. And what that assessment means is the last time you did your taxes. And the SARS does an assessment, you either pay in or you get a refund. So 5 years from that date. So if 10 years have passed and you haven't done tax returns, it's 5 years, it's 10 years now, because you've got to keep all those slips. So 5 years from the last assessment. The digital copy works. There's a lot of online, like, free tools you can download. So you can use those. There's a lot of them. I mean, there's a reason why they're free. They're utilizing that information. But there's a lot of good free online, but just take a picture with your phone, upload it to a Google Drive or something like that. And if you don't want to use an accountant, even just on an Excel, just record it. So later when you do your taxes in a year's time, then you've got the expense, you know, so it's there. If SARS has an audit, you've got it. But it's just good to track, put it onto an Excel document and just go, that's what I earned, that's what I expended and stuff like that. But any expense, really, I mean, we've had so many occasions, even where we've had situations where a client has gone to an auction and he's bought a machine that's now broken, but he's a mechanic. So he buys the machine at the auction for, I don't know, 3 grand. He fixes it. That machine's not worth 3 grand. It's worth 150,000 rand. It's a baler or something like that. Now he sells that to his company. Now the company owes him 150, even though he paid 3 grand for it. Later on, when you start making money, you can draw that 150,000 rand out tax-free. So any expense, any of the things, you've been accumulating tools forever in your job. You leave your job, you start a plumbing company. You've got all the tools. You haven't bought a thing. Those tools have a value in your company. We value them, bring them in. The company owes you, you probably find 500,000 rand. No, really, and people don't do that. They don't think about those things because they think, but I didn't buy it. Yeah, you bought it, not the company. You bought it. You sell it to the company.
If you're working from home, does the company then owe you rent as well in the future?
Any expense in the production of income, promise you. So SARS is always going to fight with you. I mean, they sort of got a big shock with and with COVID when we suddenly all had to be at home. And then they really started putting out little things. Oh, but if you claim for work from home, we're going to audit you. And they made a big noise about it. But it's a legitimate thing. You can claim your expenses working from home. But then they want, I mean, the rules are quite tight. You've got to have a specific place that you're working from. So if it's something manual and you're working out of your garage and you set up all your benches, great, they can come and see, okay, but then they calculate based on the size of your home. Same with my office at home. It's one room, it's dedicated, it's what I use for my office. I can claim a portion of my rent. But what we find is with this threat of SARS, always like, oh, we can come audit. you can charge your company rent. So now instead of you taking your whole pay, you charge the company rent. So I was going to take 10 grand a month, for example. So my pay as you earn might be like 300 rand. I'll charge the company 10,000 rand rent. It's an expense for the company. I can still put other stuff through, but that's not the point of this. And then what is my expense now? Because in my hands, for my tax, my income is rent. What's my expense? My expense is the maintenance of the place that the business is actually renting from me. So you end up, what the taxes you end up paying are a lot less. So there are just ways to do it, but yes, you can claim any expense. If you think of it, write it down, keep the slip. Don't listen to people in a bar who's going to tell you, but there's two sides. Those are the guys who go, but the SME says you can do this. Maybe not. Or these people say, no, you can't do that. Go talk to someone. Go on YouTube, watch a video. There's lots and lots of information available. Read one of our blogs. Lots of information. But seriously, any expense in the production of income. Maybe you want to wear flash clothes for work and you think, but I can't claim Polo or Gucci as a staff uniform. Brand it. Put your company name on it. What is it now? It's a uniform. You got branding on your shirt. You got branding on your jacket. That's now a company uniform. It doesn't have to be Pep. It can be Gucci. If you can afford it, so any expense. Okay. Your company card doesn't have to be like a Vauxhall. It can be a Bentley if you can afford it. SARS doesn't make those rules. Okay, so any expense in the production of income. Yeah. If you walk away with that and go look at your center items to find all the quotes you want to go follow up on. Yes. Guys, thank you. Anything else before I go? Nothing. Ed, thanks. We're going to wrap up. Everyone online, thank you, guys. Thank you. Really appreciate it. Enjoy your day. We'll see you next month.
Thanks, Aaron. See you
Cool.
guys.
Thanks. Ciao.